the most difficult parts of August, and a lot of it is probably pretty obvious now, here we are, the 8th day of the month, is the kind of chop and volatility we're likely to get. And this is very much on par with what trading characteristics August has had the last 5 years. If you checked out the free video from last Friday, where I believe it was Friday or Tuesday, where I talked about August seasonals, you can catch that at the Simpler Trading YouTube channel. August seasonals are choppy, but how do we adapt to that? And what makes it so tough? Remember that July is seasonally a very trending month. So if we're looking at the NASDAQ, we're looking at the S&P, we're looking at the Dow, we saw some significant moves. You saw Q2 to Q3 rotation with XLF. And I wouldn't even call it rotation. I'd say participation, where XLF started to strengthen. Regional banks started to strengthen. Heck, even most recently, healthcare starting to show signs of life above the 200 propulsion, the 200 exponential moving average crossing with the 8 exponential moving average. So there's a lot to like. But what's the best way to deal with August? Right now, the best way to deal with August and what we're doing right now is twofold. And a lot of traders sometimes love this or hate this. And that is, it's time to remember we always have two gears. A short-term gear, whether that's a 5-minute day trading approach, or a slightly longer-term gear, overnight or 1-hour time frame trades, and maybe occasionally daily time frame trades. Remember this, gang. Your time frame dictates your time horizon. So a longer-term time frame dictates potentially more exposure to an entry. For example, a daily time frame could go on for days, if not weeks, but an hourly time frame would be maybe a day, 2, 3, 4, 5, right? And so time frame dictates time horizon. Well, that's where the short term is really effective. So let me show you an example. One of my favorite day trading symbols right now within the Dow, within healthcare, is Johnson & Johnson. It's been very good to us. And by that, I mean, for example, when healthcare was a relative outperformer, we just stair-stepped the hourly price movement ranges on an intraday basis and got in the morning, scaled out before 11 at the first target, and then we just let it ride into the close because it met certain criteria for continuation, namely an uptrend here on the multi-trend. So we can color code things. Now, if you're looking at my charts and thinking, wrong, there's a lot going on here. Remember, we'd no sooner get on board a giant jet and say, gosh, pilot, you sure do have a lot of gauges and dials. You must not know what you're doing, right? But a lot of traders take on that thought. All it means is that it's time for us to understand what the gauges and the dials, what the indicators, the secret squiggles, as I like to call them, are. So basically on this day trading chart, I've got an anchored VWAP. I've got my hourly price movement range resistance and support zone. And I've got color-coded candles. The green candles tell me that we're bullish. The neutral candles tell me there's a little bit, or the blue candles tell me that things are a little bit more neutral. And when we do have red, that tells me things are a little bit more bearish. So with this color coding, a new trader or an experienced trader looking at a lot of charts can make quick and objective decisions. That's the whole point, right? So if you ever have a question about what's on my indicator, leave it, or what's on my chart, what's this indicator do, what's its job, leave it in the comments below, or ask me in Charts and Coffee, where Monday through Friday from 9 to 9:20, I do live analysis, break down charts, talk about levels using the tools on my screen. So what do I want everyone to take away here as we kick off the week with the first free video of the week? Think about day trading. And I just showed you one example with Johnson & Johnson. You might say, well, Rog, what about trading equities, right? So let me show you a setup, whether that's NASDAQ or Russell or the Dow. When we look at, and let's go back to color coding, right? If I look at a structure down here, this is the structure, yellow. What does yellow mean? Yellow means sideways, okay? When I see yellow structure, but I see red grab candles, right? And the bell is rung right in here. I see red. Chances are we're going to see lower lows. So neutral market plus red grab candles tell me neutral to bearish. By about 10 o'clock, actually just before 10, we've got red candles, and we've got a red structure. The structure of the trend is the lower row of this multi-trend. Okay, fantastic. What else do we see here that's going to contribute to bearishness? I'm below, right? You can see price action is below the anchored volume weighted average price. So these are AVWAPs, prices below those, right? That's another very valuable thing to know, that, yeah, we're probably going to continue to head lower. So when you start putting these together on a 5-minute chart, it doesn't mean that we're in and out and in and out. In fact, it's just the opposite. I'm the world's most boring day trader. What I want to do is find a direction and stick with it, right? And that's not always going to be easy. There are criteria that we could use to help us understand if we're going to continue lower, right? Here's an example with ZB. Same idea. Crude oil was actually a little bit strong. If you take a look at CL, it kind of started off sort of neutral, right? I say strong relative to what we've seen. So pre-market, 7 a.m. Eastern, 8 a.m., right? This was neutral. Come the bell, what happened? Red grab candles, red multi-trend, right? So that's how Monday moved. And then let's take a look at today, right? What do we have here? Like I said, crude oil was strong. So I contrasted what a weak market looks like compared to a strong one. Now, what else is going to help us understand whether or not crude is bullish or bearish? Gang, day traders can use a lot of insight from a daily time frame as well. Am I above or below the line in the sand, which is the previous session's cash close? This is something that we've been using for a very long time in day trading. I've been teaching this for a long time. It's a sentiment level, right? Okay, above or below the line in the sand. We're neutral. Take a look here, gang. Neutral environment, mostly green grab candles, right? There's some blue and red, but mostly you'll notice it's green. By 10:30, we've gone green on the structure and nothing but green grab candles. And so we buy the moves into the HPMR. And so this is how we can automate tools, understand what's going on the dials and gauges on our dashboard, and then use colors to understand which direction we should trade in. If we get direction right first, we're going to be far better off. This is how I'm trading August, gang. This is the edge shorter term time frames can give us. And right now, day trading is working really well and probably still will as we go through August and likely into September. I'll see you in the next update. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.